This is where we talk about specific locations. They want to build 100,000 new homes, 20,000 are going to be in the missing middle, and then 4,500 are going to be affordable. And these are our inclusionary zones, our major transit station areas. This is a direct quote from the press release. Waterloo Region is expected to grow primarily along the Ion Transit.
Welcome back to the Canadian Real Estate Channel. I'm Adam JD Martin, your host, and today we're having some fun with the Kitchener-Waterloo Market update. I got Zack Brittain here from Phipps Brittain. Zack, what's going on today?
We're living the dream. We are in the thick of the spring market. We got another couple months of mayhem. Market's kind of changing pretty quickly. So we're gonna get into it. We're gonna get into Waterloo Region. We're gonna get into some of the zoning changes we touched on last video, and then me and you, we're gonna talk different types of multifamily real estate and the trends that we've been noticing. So if you guys are more interested in the multifamily stuff, I'm excited to talk about that. I'm noticing a ton of different trends in that space, but we'll go over the Waterloo Region first, and then anybody. If you own property within walking distance, they call them major transit station areas, but we're calling them the LRT stops. You can Google them, Google Maps them. If you guys have property within there or you want to invest in those areas, I'm just going to start the video and say you got to get in touch. There's a lot of changes happening in there. We've had a lot of conversations with people that already own some properties in there and other people that want to execute on these changes. So don't be a stranger. Send us a DM on social media. You know how to get in touch. But here's what we're going to go through today. We're going to talk, what is a spring market anyway? I think us, especially here in Southern Ontario, people buying and selling real estate or you real estate investors like me and Adam out there, we have had a extremely consistent market up until the last few years. And typically our spring markets have been either consistently up, which is typically what we're used to, or consistently down, last year as the interest rates were really coming up. Well, we had a nice big bump here in March, and then April had a little bit of a stumble. And then May, we're really starting to find our equilibrium. We're going to talk about that. Zoning changes, 4 units on one lot. Adam, if you guys didn't watch the last video, you can do 4 units on one residential lot here in Kitchener citywide. And then we'll talk about how people are scaling their portfolios and those multifamily deal trends that I just alluded to. So if you guys already saw the quick video on the market stats, good for you. I'm sticking with the Hot Ones memes, Adam. Oh shit, like Idris Elba. Spicy wings were not for him. He got messed up on Hot Ones. He got in too deep. And a lot of sellers, I think, have gotten in a little bit too deep in terms of their expectations. Yeah. March, guys, we saw a 5% increase in median and average sale price in a month. Like, these are huge gains. That cannot be expected to continue with any sort of certainty or stability. So the number of new listings in April, Adam, jumped 65% from the same time last year. Wow. But you also know last year, you other investors out there that are paying attention, last year we had absolutely no inventory. So 65% jump from very low inventory doesn't really seem that significant, but that number of new listings is really helping inventory in some market segments start to stack up. And buyers are starting to get the feeling where they may have a little bit more options or a little bit more time and patience than they have had before, right? That's probably primarily the reason why the median sale price fell 15,000 last month. Now, months of inventory there is up to 2.5 months of inventory. Pretty much any major market, more than 200,000 in Southern Ontario, typically does not have much more than 2 months of inventory. If you guys have watched the other videos from the other people on the Canadian Real Estate Channel, they're echoing a lot of the same stuff that I am in the sense of they had primarily low inventory in most market segments. That being said, the only market segment that is significantly above 2 months of inventory is condos. We have 4.4 months of inventory of condos. That should be about a balanced market in condos. That being said, expectations in the condo market are not very high. There are a lot of sellers that are grasping for higher prices, and inventory has stacked and those units have not moved and new inventory has come in. So if you're selling a condo, price it right, be aggressive on your price, make sure it shows well, and you might actually have to market and work the listing to sell it. God forbid, ladies and gentlemen, right? It's not rocket science, but I just need people to understand the condo market stacking inventory, freehold detached, freehold semis, freehold towns are still around 2 months of inventory or less. And if they're especially priced under a million, if they're unique locations, if they're really good condition or features, they're still selling very quickly, right? Days on market. You guys out there, days on market and list to sale price ratios. These are the spicy ratio, Adam. You know the deal. These are metrics that should be considered, but they should be taken with a grain of salt. Primarily because days on market can be skewed quite heavily by the way that they record the data. So listen, if I put a property on the market and it's been on the market for 100 days and I cancel the listing and I put it back up at a new price and then sell it, and I sell it in 2 weeks, well, it may take the 2 weeks that it was on the market as the new listing instead of the 100 days plus 2 weeks that it was actually on the market because they're
Yeah.
considered different listings. Now, that being said, good deals are selling quick. A lot of properties are listing below their market value. They're holding off for multiple offers and they're selling in a week or two, plus a week of conditions maybe. So typically you're saying anywhere between 3 and 4 weeks for most sales in our marketplace right now. And then your spicy ratio, on average, they're going 4% over asking price, primarily because most listings that are selling are priced appropriately off the bat. So they're going to sell close to 100% regardless, or they're priced really low just to get multiples and to sell a little bit more quickly. Okay. So that's a quick snapshot of April. Heading into May, we're expecting the same things. And these are my quick notes on what our expectations are for May and then heading into June. Market's fragmented, stacked inventory, especially in the condo market. Otherwise, the other market segments are about 2 months or less. And typically the freehold market has seen a lot more consistent activity than we have seen in the condo or in the smaller multi-unit space. And, oh, I see you lurking out there. I see you lurking out there. So does BMO apparently, because BMO's just shared a stat that over 70% of prospective buyers are on the sidelines until rates change. I don't know if you're seeing the same stuff, Adam.
Yeah.
I'm assuming that a lot of people out there, the smart ones are, doing property valuations, portfolio analysis, equity reports on their existing holdings. They're shoring up their financing options if they want to make a refinance or a new acquisition. They're doing their research like they are either chiming in to watch our videos or doing their own homework and due diligence, and they're getting ready to make a move, right? Now, there is a portion of the market segment that is ready to pull the trigger now because they would like to avoid the competition that is likely going to come when interest rate environment does change. We've
Yeah.
talked about it before. If you guys are in a position to make a move on a deal that makes sense now, then you may be putting yourself in a situation where you could get a more favorable price because interest rate environment, if it does change, will likely bring more competition to Waterloo Region and most of Southern Ontario, I suspect. So people are trying to make up their mind on if prices are going to stabilize, if they're going to go down, or if they're going to go up, which is rare for a spring market. Typically in a spring market, it's got one direction in Ontario because of the seasonality. There's a lot of activity. There's a lot of people that are making moves for family, for kids, for personal reasons. These people are still out there making moves, but people that were kind of on the fringe of maybe not this year, maybe the prices don't make sense, maybe we can stay in our house another year or two. A lot of those kind of fringe buyers or sellers, they're just saying, hey, you know what, Adam, Zach, we're going to sit tight and wait till we figure out which direction the market's going to go. And it's, nice to see that some of the big four banks and some of the people that have a lot more information are seeing the same trends as we are.
Yeah. Yeah, that's good for sure. And I'm always interested by the people who are like sitting on the sidelines because like we know that action always beats reaction. And I'm always kind of fascinated by like like if people are waiting for like a quarter of a point drop in rates, like first of all, guys, look up the Smith maneuver, right? You guys can write off the interest portion of your debt. So that's not really a problem for you as long as the asset still cash flows or you can find a good investment. And the reality is, like, if we're buying now at a discount because rates are high, like those discounts are usually going to be significantly greater than the actual cost that you take on by having a marginally higher interest rate on your loans. So, I mean, again, I think just the spirit of this, that my spirit, anyways, on this is like action always beats reaction. So this is the time to like be seeking out deals and actually putting in the work, right? This is when you make more phone calls, you knock more doors, you do better work and more work with your power team, not less. This is not a sideline
Yeah,
time.
and that's funny you mentioned that too. Is we're doing a presentation this week, this weekend, and one thing that we want to hammer home is like just surround yourself with other people that crush the deals that you want to crush, and
Yes.
just go out and start taking action.
Yes. Yeah.
Like
Because the sideline
it's
people surround themselves with other sideline people. And that's the problem because then it's an echo chamber of just inactivity, right? So go find somebody actually doing something and do it. Do it with them.
yeah, It's a crazy idea. And I started my business in sales, moved into full-time investing. So I mean, in sales, it's more calls, more emails, more meetings, more sales, right? More, 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 more. How much activity can you do? How efficient can you do it, right? But for me as an investor, same principle applies. The more properties I view, the more properties I underwrite, the more connections I make to get my hands on more deals, the more investors I talk to, the more I learn and the more opportunity comes to me. The more opportunity comes to me, the better chances I have to make a good investment. Plain and simple. And
100%.
so I have to echo that again, action over reaction every freaking time. So put yourself in a position that doesn't mean you have to be buying or selling property right now. Like those decisions, there's a lot of other information and decisions that go into making that call. But getting more information, having more conversations, doing more research so you're ready to go and you understand what you can and can't execute on, always a good idea. So, for you guys that are interested in taking action, let's say, or you want to get connected with me, our investor hot list every single week, we focus on deals either on market or off market. If we have pocket listings, if we have upcoming inventory that our clients are going to be bringing to market, and we also see on market or off market deals that we think offer good value here in Waterloo Region and beyond, phippsbrittonrealestate.com. Link is going to be in the description. Now, this is a good first resource, Adam. Yeah, for those of you that want to learn a little bit more about our world, where we see deals, the types of inventory that's on the market and off market here in Waterloo Region, this is a good starting point. But if you're ready to actually make an acquisition, it takes more specific advice than just me sending you guys an email. There's very little that we can do by just sending you guys an email saying, hey, here are the deals, here's some trends that we're noticing. That's a great start. But please send me an email, hop on a quick call to better understand what your goals are, what the current situation is with your financials, with your portfolio, or with your long-term goals to put a legitimate plan in place. And then we can specify the opportunities that you want to actually execute on. This is the best way to move forward. Happy to hop on a call. If you want a good first look, you want to just get connected and come into my world, get on the investor hot list. It's a great first resource. And I do share a ton of other stuff, whether it's events, reports, or specific information that we have available. It's a good resource for you guys. But I got some juicy yum yums for you deal hunters out there. Yeah, I know. So current opportunities, handful of duplexes on market and off market right now between 750 and 900. If you're typically under 800, these are properties that either need a little bit of work maybe or can have an increase in rents, right? Or they're in a busier location. Typically, if you're around 7 to 800K, that's where they're going to land. 800K to 900K, typically better conditions, better locations, better rents, owner occupier, house hackers, or just turnkey opportunities. We also got a renovated triplex. 2 of the 3 units are brand spanking new. Main floor unit is about a 6.5, 7 out of 10. Downtown Kitchener, East Ward, double car garage, 3-car exterior parking. This one's just a turnkey cash cow, ladies and gentlemen, as well as a purpose-built sixplex, a purpose-built 12th unit that's all been turned over. That one's a cash cow. If any of these deals tickle your fancy, give you the ooh, that could be nice feeling, send me a message. Don't be a stranger. Contact information in the description. Now, I gotta take a big deep sigh. Adam, I've
Mm-hmm.
been having 2 conversations a lot the last 30 or 60 days. Number one, Zach, I want to flip. Sick. Me too, man. I want to flip too. Now, the reality is the environment for flipping, if you're flipping just, let's say, single family or 2 unit properties, right? Which is typically what a lot of people in our market are flipping, the cost to acquire those properties didn't come down as much as the financing environment came up.
Right.
Sellers' expectations also didn't come down enough to offset the rise in financing costs, the rise in acquisition, renovation, and carrying costs either. So costs went up and prices didn't come down enough to offset that. So the flipping environment for the last 2 years in Waterloo Region has been extremely challenging. I have flipped properties. I have not flipped a property for 2 years, primarily because my investment strategy has changed, but also because the environment for flipping isn't screaming, hey, you can make 50 to 150K a flip in the market anymore. The only way that you guys are getting really healthy profit margins is if your acquisition costs are super low, which means you're just getting a nasty deal. And really, really crazy good flip opportunity deals are not readily available on the market.
Yeah.
They're just not.
Agreed.
Our market is competitive. Also, renovation costs. They haven't come down, Adam.
Yeah.
Shit ain't cheaper.
Yeah.
It's just not.
There's a massive bullwhip effect here where like everything got more expensive and like your seller's expectations lag super hard. and you're never going to get your products to come back down. Like that's just how that works in the market. Once a product's more expensive, it's never going to be less because
It's much
everybody
stickier to come
inflates
down in price.
everything. Yes.
Exactly. And then carrying costs. It's more expensive to carry a property, which means it diminishes your profitability and the equity that you have available in the property when you sell it. So we flipped a ton of properties. That's one of the ways that we built our portfolio, built up our cash position. But one thing that we recommend if you're flipping is look for off-market deals, either be able to buy them cash or in really good A lender financing, be able to renovate them cheaper or quicker, so that you can make up your margins in that section of the deal, because it's very tricky to find good acquisition costs. So you flippers out there, I feel for you. I want to find you flip deals. They are very, very difficult to find right now. So we recommend look at the value add projects, flip a single family into a duplex, flip a single family into a triplex, so that if you cannot get the resale, you can keep the asset and have a cash flowing multifamily that you can hold for a few years or hold in perpetuity to really build wealth, or sell in the future, but you're not bleeding every month because you have tenants paying market rents in good new locate or good new units. And guys, passive opportunities. Since a lot of people are finding it challenging to do flips, or they're finding it challenging to get good deals, we've gotten a lot of feedback and questions from people, and we're getting this, and we're talking to other investors too, and they're giving us the same thing that we're seeing is there's more money and people that want to invest in real estate than there are good deals available for them to actually execute on. So a lot of people have asked us about passive opportunities, whether that's lending on projects, whether it be flips, BRRRRs, whatever, or either partnering or JVing. So we've had a lot of questions on that. Happy to have that conversation if people are interested in learning like what that is. If you have experience in it and you just want to figure out where we can connect with people that have deals to get involved with. But if you're more curious on understanding what passive investing is in real estate, like happy to talk about it. There is a ton of opportunity in there if you could connect it with the right team. But those are just two conversations and trends I've really been noticing the last few months. And then this, okay. That's the trends. That's a little bit of what we've just been seeing. I appreciate the people that have been reaching out through the Canadian Real Estate Channel. A lot of people that got connected with us last year through the Canadian Real Estate Channel have been keeping in touch and touch base, last month to get ready for the spring market. So I've had a lot of really good conversations with you guys and girls. I appreciate that. If you guys have already seen our bit last month that Adam and I talked about, the 4 units on 1 lot, this is a big change. I feel the need to hammer this home again. So I'm going to go through it real quick. If you already saw this, bump to the end where we're going to talk about investing in multifamily and some of the trends we're seeing there. But this is a huge change, Adam. We got to cover it again. So to summarize, City of Kitchener has been like, yes, we need units. Yes, we want people to permit them. We don't want people doing weird shit, not permitted in. Bring us your permits. We want to build more units. So on a single family home, on a duplex, or on a triplex, I can add an ADU. And an ADU can have up to 2 units. So on a triplex, I can do 1 ADU. It can be attached or detached. On a single family home, I can build 3 additional units. On a duplex, I can do 2 additional units. They can be attached, they can be detached, they can be in the same existing footprint. There's a lot of different ways to do this. And this is a huge win for investors because it just gives us more options. So ADU that we have a model. We're building one with a basement, and we're building a 2-unit ADU later this year for a client. DM us for our model. We have 1 bedroom, bachelor, 2 bedroom, and we have 2 floor ADU models already ready to rock and roll. Send me a message if you guys want to take a look at the models or have a conversation on pricing. These are great for people that need extra income on an existing property they don't want to move from. They need separate living spaces for family. We've booked a lot of these for the next couple of years for people that are going to be building them for elderly parents, grandparents, or mature kids to have separate living spaces. And then honestly, a lot of people that don't necessarily utilize their yard space, some of them that are savvy are putting it in just to add additional rental income and increase the value of the home. So these dramatically reduce the cost per unit compared and allow options for multi-generational families compared to just going out and buying an existing property, a legal duplex, triplex, or fourplex. If you already have the land, or if you want to actually add the value to a current property you want to acquire, these can be awesome options. And this is citywide. This isn't just in specific locations. This is where we talk about specific locations. Growing Together plan. They got to get way more cool with their
I
like
love the naming conventions.
acronyms. It's so lame, but they want to build 100,000 new homes. 20,000 are going to be in the missing middle, and then 4,500 are going to be affordable. And these are our inclusionary zones, our major transit station areas. This is a direct quote from the press release. Waterloo Region is expected to grow primarily along the Ion Transit. Guys, all the land in the suburbs surrounding the city, the farmland, that has already been purchased. that's already set for, sprawling single family home communities, low rise apartments, and townhouse complexes. That's happening. That's going to happen for the next 20, 30 years, right? The only other places you're going to see significant new growth is going to be along the Ion Rail. If you don't know what the Ion Rail is, go back and watch every single video that we've done on the Canadian Real Estate Channel, because I think I've mentioned it every single freaking time. And then Google Ion Rail route and just follow the Google Maps route so you can see it. This is huge for us in Waterloo Region. Here it is right here. The major transit station areas, 500 meters walking distance, 800 meters walking distance. This is direct. This isn't like, through Google Maps. This is just basically your circle, your radius around it. There are massive changes in these areas. So this is just a map that they shared. You can look it up. You can Google it real quick or send me a DM. If you have properties in these zones, if you want to invest in these zones, you need to contact me. We are going to be doing a ton of business in these areas. There's a ton of opportunity, whether you're a current homeowner and you want to improve, or you want to leverage that current property into your first investment property or another investment property for yourselves. These areas are going to experience great activity, and we're really digging in to figuring out what options we have and what are the highest and best uses for different types of properties in these areas. And this is what you guys need to know. Full range of building types are coming to the MTSAs. No density maximums, no parking minimums. If
Insane.
anybody watching these videos has done any sort of investing in development, redevelopment, new build projects, understanding that there's no density maximums and no parking minimums is like a green goddamn light to go build some big ass shit.
Go, go,
Now,
go, go, go.
they're basically saying, I don't care how densely we can populate and build these units. I don't care how many parking spaces you can actually provide. I freaking need housing. I need units along these areas because we have the transit infrastructure and we have the demand for the housing units. Freaking come build them, please. And the requirements for like affordable housing units when these buildings or developments are being done is extremely reasonable. 1 to 5% of the units being built are going to be affordable housing. And affordable housing is based off the median income metrics. So if you guys don't know anything about that, send Adam a DM, send me a DM. We can walk you through how that checks out for different cities. And then full mix of uses, flexible building regulations, including zone without height limits. So they're going up. I said this last year when we had some of the Wealth Genius crew on here doing some videos before Adam jumped in. One of them did a ton of developments around the Ottawa area. And I showed my treasure map. It was an awful Google Maps with some freaking lame ass stars and weird different shapes. It was hideous, but it was extremely clear that these zones are going to experience higher than, I would assume, higher than average appreciation because of the redevelopment that would be coming to these areas. And the way I like to describe it is this: would you like to buy property a stone's throw away from a subway station in the GTA? Do you think those locations are going to appreciate better or be more desirable or be easy to fill for tenants or be able to get premium rents because those locations are better? Yeah. Well, you can go do that now, 20 years before all the apartment buildings, condo buildings, shops are built up around these locations. So this is screaming huge short-term and long-term potential for me and my clients. We love this move by the city of Kitchener. So, Adam, this is where I would love to get you to chime in a little bit.
Yep.
You have a ton of experience. And so we have been extremely active in the multifamily market for the last few years, and we've really stepped up our game in moving more into multifamily and real estate investing because it is a very logical and very simple way to scale a portfolio, right? Now, there's three kind of main ways people are investing in multifamily real estate. They're burring. So you're buying something that needs some love. You're spending the money to give it the love. It's worth more money when you give it the love. You refinance your money and you make some cash.
Yep.
And then there's the buy and hold. I just find a building that I like that's making good money. I buy it and I just do freaking nothing to it and hold it, right? And then building new. So I want to cover kind of those three types of multifamily investing and the trends that we're seeing where people are really making their money or really finding value in these different segments. And then obviously get your opinion on them too. So first, the burrs. This is how I built my portfolio. I was burring smaller multifamily properties, 2, 3, 4, 5 unit properties. Now, primarily the risk in burrs is the tenant risk here in Ontario. That's a big portion of the risk because you're taking on a building, Adam, that is likely getting either depressed rents or depressed condition, likely both. And tenant, you have a lot less control over tenants here in Ontario because landlord and tenant board. So I see the primary risk, and in my experience when I'm underwriting these deals, is you're going to be dealing with tenants that have either been there for a while, paying low market rents, or in low condition buildings. And that creates a stickiness and increases the risk of a tenant not either leaving, not even paying more rents, or not being willing to work with you as an investor, right?
Yeah, I completely agree with that. And again, like if they don't leave, then you're stuck at the current rents, which means you have a very hard time getting that future value when you try to increase the rents and therefore the value of the building itself when you go to do the refinance. So that's sticky. And obviously, what this ends up doing is it pushes us towards trying to get buildings with more vacancies, which can often be reflected in the price as well. Like you'll often end up paying for that vacancy on the purchase itself. So it's
Yeah.
definitely a large risk in terms of the tenant risk for sure.
Uh, yeah. And what we've noticed is if sellers understand that the building is getting depressed rents or in depressed condition, they're very often pricing in or have a future value of what the building could be in their expectations or in their
Yes.
price.
Yeah.
So if I'm selling a 10 unit building and five of the units are getting low rents and the other five units are going to be vacant, the current seller is selling that building based on what all of the rents could be, right? They aren't necessarily selling the building for what it is right now. They're investors. They understand what the building could be, and they want a little bit of that future value to be reflected on the value they're selling the property for. And like I said, in the resale market for residential, whether it's 6 units and under, or you guys buying and selling your primary residence, is sellers' expectations have not adjusted down as much as costs of financing, renovations, and acquisitions have increased. So
Yep.
there's a little bit of that disconnect, which is making it hard for people, even in the BRRRR space, to find good value. So the one big risk as well is just your burn rate, right? If you're buying a property and you're not getting great rents for it, well, if you're not able to get A-level financing on it, then you're spending more money every month on your financing, and your investment thesis strategy hinges on your ability to lift the rents and the income of the property in the short term. These can be insanely profitable. I love burring properties, but they are not without risks. So just be conscious of your burn rate and be conscious of your ability to execute on these types of deals. If you don't have experience burring properties, don't go burr a 30 unit apartment building for your first deal, maybe, because there is a lot of things that go into executing these types of projects. A little bit more risky. ROI is sexy. You're getting your capital back quicker. You usually got a really nice exit, but a lot of things got to happen in order to do that. More risk, more reward, right?
Yep. And I would argue too, though, there is a sweet spot. Like the single family house is also inherently risky because there's only one unit, right? And so I find there's a sweet spot somewhere between like the fourplex or the sixplex, where like if you cannot get a tenant out, you still have five other units producing for you or three other units producing for you, which can often
Yeah.
make completely the entire difference between whether you have a successful project or not. So there is
Yeah.
a sweet spot there. I just want to throw out.
That's awesome. And honestly, like that sweet spot is kind of that combination between a burr and a buy and hold. Oh, do
Yes.
the numbers look pretty good as a buy and hold? Do I just need to maybe I just need to add some income on low hanging fruit,
Yeah.
add storage units, add laundry,
Dishwashers
it,
somehow is like a major value add, which is
well,
crazy.
dude,
But
once you have a dishwasher, I mean, you can't go back.
I had one for
I'm
years and
not
never
going.
used it.
No way, you're crazy. I'm
I
not
know.
going back. I don't even do the dishes. I'm praying to God that I don't, but I'm not going back, right? And then so the buy and the hold, this is typically where we see a lot of investors finding really good value. It's a combination between a burr and a buy and hold. Like let's say a slow burr. It's something that's performing pretty well now. Doesn't need insane capital investment right now, but has upside. And we'll talk about in the last point there. The cost per door for these, you really got to focus on your cost per door and your financing options right
Yeah.
out the gate. If you're getting a really good cost per door, listen, if you're looking in any major city in Ontario, and you're under 200K per door and the income isn't garbage and your cap rate isn't garbage, all right,
Yeah, it's
worth a
good to
look
go.
digging into from what I've seen.
Yep.
Just generally speaking, right? As long as you can get good financing options right off the bat, A lenders, maybe direct to CMHC, then if you can find these deals, they're not readily available, but you can find them. Take a look. Take a serious look at that. The point I wanted to make in combination with our BRRRR conversation was the gap to market rents. If you're doing a BRRRR or a buy and hold and the gap to market rents is huge, when I mean huge, I mean more than, let's say, 60 or 70%, right? Think about this. I mean, Adam, I know you have experience. Some of you investors out there that are watching have some experience as well, but think about it. If The average rents for a 10-unit building that we're buying is $1,000, but market rent is $2,000. Guys, people that are renting for $1,000 cannot afford to move into a unit for $2,000. That is double. That is 100% gap to market rents,
Yeah.
right? If all of your building is 100% gap to market rents, you are going to be fighting an uphill battle because what their other options are, whether they're moving to something else, whether they're moving to a different unit in your building you're providing them, that is too big of a gap for most renters to make that jump.
They would
So it's either
literally
going to
have
be
to move cities.
so if you're trying to buy a, like I said, random example, 10-unit building, and the gap to market rent is $1,000, you are going to have a very hard time improving the value of that building in the short term. If your plan is to go in and burr that in a year, I'm not saying you can't. Lots of people do. It can be a very effective strategy. But for most investors out there, that is going to be a very challenging investment. So, one thing we look at, Adam, is on buy and holds, which we love. Look, boring real estate effing works. Like, you guys don't need to go reinvent the wheel, do any fancy strategies. Buying and holding good properties in good locations that you can get at a fair price, which is hard, I will admit. It's simple, but it works. So we look at gap to market rents. If you're anywhere around a 50% gap to market rent, property's in good condition, it's in a good location, so you know you're gonna be able to get tenants. It is not unreasonable to expect normal tenant turnover. And in a 5-year window, in a 3 to 5 year window, you're likely going to dramatically improve the value of the property because your incomes are naturally going to increase. Old tenant moves out, you renovate the building, you charge significantly more rent for it. Once you're coming up to your refinance, bada bing, bada boom, we're making some freaking money. Okay. So buy and holds, simple, they work. It doesn't have to be sexy, but I don't know anything sexier than making a shitload of money. So building new, the other segment of the larger multifamilies that we've done a ton of work in, and this has become increasingly more popular as burrs and as buy and holds have become more rare and the numbers haven't looked as attractive as they did maybe 5, 10, 15 years ago. And the reason why it's become a lot more attractive, especially in Ontario, is no rent control on newly built rental units. So investors are thinking, I have more control over my tenants in terms of my rental income, which is the value of the whole freaking building. I'm just going to build them new, right? The big thing here, Adam, is just cost to acquire land and cost to build.
Yeah,
Shit's
for
expensive.
sure. Yep,
Shit,
both on
shit's
both
expensive.
ends.
Yes. Shit's expensive, right? Now, the numbers can work, but you have to have a long time horizon, right? You can't be, this isn't a year in, year out project. But you dramatically diminish your tenant risk because you can get a premium rent and you have premium condition. So your property management can likely be more efficient. The condition of the property means less maintenance off the top, and you're getting premium rents, so you can have great refinances or great resale potential. These are more rare, more specialized, and typically take a much larger and a more sophisticated team to pull off. We've been doing a lot of research in this space because eventually this is where we'd love to go. But it's very rare and very difficult for people to just jump right into go building, 20, 30, 40, 50 plus unit apartment buildings. Like these are big project undertakings, but long term, there is a ton of opportunity in this space because like Adam, like you guys know watching the video, Ontario is chronically underbuilding like most of Canada any type of real estate. So if you can get into this space, there is a ton of opportunity to be extremely profitable and actually build some really cool shit. So those are the trends that we're seeing is just the cost is just very, very high. These are for people that are willing to pay for a premium, but you kind of get what you pay for. Purpose built, modern, all the features, all the amenities, perfect condition. You're getting good tenants at market rents. There is big value in that if you can pull these types of deals off. Now, last but not least, investor hot list. I got to plug this acclaim real quick. If you guys are ready to take some action, send me an email. We need to hop on a call. Last but not least, I am going to be at the multifamily conference May 24th, 25th, 26th. If any of you guys are going, you want to connect, you want to grab lunch, you want to grab a coffee, you just want to catch up and say, hey, well, you're there, send me a DM on Instagram or send me an email direct. I want to make time to get together with some of you guys and girls that I've already connected with. And it's a good opportunity just to catch up and see what you're working on. I'm an open book as well, so feel free to ask us about our projects or about where we're seeing value here in Waterloo Region. I don't want to be a stranger. I'm here to make friends, Adam, right? Get further with friends. So without further ado, if you have questions on that or you want to get connected, send me a DM and get on that investor hot list if you're looking for some deals, baby.
That's awesome, Zach. Well, thank you so much for this month's market update. I really appreciate you coming back. And if you guys aren't already subscribed, just know that we're back here every single month with your update on the Kitchener-Waterloo region. And that being said, we've always got deals. We've got updates on what's actually happening in the city. We've been talking a lot about zoning changes, about things that are really impactful to your investment strategy. And Zach's always up and current on that. And the whole point of that is so that we can save you time, so that when you're actually looking to invest, you're worried more about your goals and your investment strategy than you are investing all of your time in trying to find things. So Zach's already doing that for you. So guys, get subscribed. Make sure you're coming back here every month, because every month we've got something new for you. So thank you very much for tuning in to the Canadian Real Estate Channel. We'll see you back here next month.